Thank you, Mr. Chairman. As I was preparing for this meeting today, I was hesitant to go through the entire legislation that's been proposed numerous times. I'm hesitant to go through it in its full detail, so
We appreciate that hesitation.
with
After 14 hours last year, the majority of the committee, I think, has the concepts of however you can highlight the
thank you, Mr. Chairman, and
Funding
that is my
sources.
intention.
more
I know there's
specifically changes.
exactly. There are some new members for the committee, and so I'd like to just give an overview of the approach. A lot of that's been detailed in the paperwork that's been handed out prior to this meeting. But in a nutshell, what this proposal intends to do is to fully eliminate school property taxes. I must point out it is strictly school property taxes. It does not go after the county or municipal taxes, and that is a question we get quite frequently. But in eliminating all school property taxes for both residences and business owners, it's all commercial, industrial. Anybody who owns property will receive full elimination of their school property taxes. That will be done through an increase in the sales tax from 6% to 7%. Now, that will not only be done on existing items that are currently under the sales tax, there will also be an expansion into some additional goods and services. And those have been detailed pretty fully on the documents you've already received. In addition, there will be an increase to the personal income tax. That will go from 3.07% up to 4.34%. And in doing so, that will provide us with the revenue. Those two sources, the increase in the sales tax and the increase in the income tax, those will, by and large, close the gap that we need to fund property tax elimination, school property tax elimination for the Commonwealth. A couple of important exemptions to point out, because those are some other questions that we often get. You know, will you be taxing everything? Unlike the proposal that Representative Gillespie alluded to in his presentation back in 2003, the idea behind that was to essentially tax everything under the sun and lower the sales tax from 6 to 4%. I was on staff for Representative Rohr when that proposal went through and worked with a lot of the members. What we saw was there were a lot of areas that we found it just wasn't practical to tax, such as health care. The moving target on what the actual cost of health care to a consumer, what does a health care provider charge, that's just one of the elements that we pulled out and said, as we walked through developing this legislation, how can we avoid that landmine and make sure that we're taxing what is actually collectible? So what we ended up with, as time progressed over the last 10 years now, we found that in looking at the numbers and following them through, we had to minimize the number of exemptions, but we had to have exemptions in that made place. Two of the most important are food and clothing. Currently, quite a bit of food is exempt. Not all food is exempt, but most food is exempt. We would make a change there. And what we looked at is to how to provide the least amount of impact on the lower income individuals, because we know that the sales tax has a regressivity to it. And so in order to minimize that, we said, how can we keep from hitting the lower income individuals harder than absolutely necessary? And what we came up with was an approach that says, let's help establish good public policy at the same time while providing an exemption for food on some level. And where we landed with that was we chose to exempt the items from women, infants, and children. And I noticed that Representative Gillespie did something similar in his proposal as well. It's a common sense way to do things, and what it does is it allows even the lower income families to go out to the store, buy the foods that are healthy. USDA has determined on a federal level what items and what nutritional elements need to be in the WIC program. On the state level, we administer that with our local grocery stores and the store brands, and so those items are fully identified to the public for the WIC purchases, and we will take all of those purchases, and anyone who purchases WIC items will not pay sales tax on those food items. And we feel, again, it's a good way to ensure that families are still able to feed themselves with healthy food, and they can continue to not have to pay sales tax on those foods. Secondly, we looked and said, you know, what's the other elements that people need. Obviously, food, clothing, and housing. By helping with the property taxes, we're going to help with the housing cost. We've talked about the food. Clothing is the other main element for existing in life, if you will. And so we didn't want to attack clothing and say we're going to tax all clothes. So in a similar manner, we looked and said, can families clothe their children if we put a dollar amount limit on the sales tax? And with that, we chose to tax items that are only $50 or more. For instance, if you purchase a pair of pants for $49.99, at the same time you're buying a shirt for $49 and a tie for $49, you won't pay sales tax on any of those items. So even an individual who's looking to dress for a professional job can usually clothe themselves for no additional sales tax. And of course, any of these other items on an individual basis, as long as they are under $50 per item, there will not be sales tax on them. Again, for sake of time, I won't go through all of the exemptions, but I did want to highlight some of the changes. This legislation, House Bill 76 and Senate Bill 76, these are identical pieces of legislation. I wanted to provide a quick overview on where they are in the House and Senate. In the House, we have 68 co-sponsors, 51 of whom are Republicans, 17 Democrats. In the Senate, we've seen a surge of interest over there. They now have 20 co-sponsors on the identical legislation there, with 11 Republicans and 9 Democrats. So this is getting some momentum in the Senate, and I believe we've got some good cause to see some action here in the House. I'd love to see it move, obviously. Last summer, we had hearings, and as Representative Benninghoff talked about, we had 14 hours of hearings, and those who survived that came out with a better understanding of the legislation. What also came out of that is a further analysis performed by the Independent Fiscal Office, and they concluded with an 88-page study, and that 88-page study talked about a lot of the benefits, and in a moment I'll be discussing some of those, but a lot of those benefits are somewhat intangible benefits. You're not going to be able to read the legislation and say, oh, it's a natural conclusion, but they are conclusions that we, as we developed the legislation, felt were there, and it was good to see the Independent Fiscal Office study confirm those benefits. Also, as an outcome of the legislative hearings that we had in this committee, the Appropriations Committee examined the legislation as well. At that time, it was House Bill 1776, and there was a companion Senate bill as well. Both of those studies included an amendment that we had drafted. We had identified some shortcomings, identified a few problems since the legislation had been introduced in April. So when they analyzed it going into September, they had a modified version of House Bill 1776. What you have before you in House Bill 76 and Senate Bill 76 is that legislation as it was amended, as it would have been amended by the amendment that I provided to the IFO and to the Appropriations Committee. So everything said in the Independent Fiscal Office study and in the Appropriations Committee, everything said in their study, that has been taken care of, if you will. Concerns they raised, errors they pointed out, we took and provided the same information to the Drafting Bureau. They then compiled the legislation, and the nice thing about it was a bill that started off some time ago as 210 pages and had gone down to 170 pages with House Bill 1776 is now only at 137 easy reading pages for your entertainment. So it is a comprehensive piece of legislation. I can't overlook that, and that with that comes a significant length. With that overview out of the way, I've got about 5 or so minutes to discuss some of the things that we hear. One of the things I want to talk about are some big changes that were made. The Independent Fiscal Office pointed out a shortfall of $151 billion. That was on page 3 of their study. There was a drafting error that accounted for a good chunk of that. $340 million was in a telecommunications line item that should have been taxed, and it was inadvertently omitted. So right there, we take the 151 million and add the 150 1.51 billion. Take out the $341 million due to that error, and we're already down to $1.169 billion. Now, we also had an increase last session of 0.94% in the income tax. The IFO analysis stated that that increase would generate $3.36 billion. And so just using their math, we didn't extrapolate any new numbers or anything like that. Just using that math, we divided $3.6 billion by the 0.94% that we had increased it. And that shows us that for each 0.01, we generate $35.75 million. If you take that to the next logical level, we're trying to fill a $1.169 billion revenue hole still. We plugged in another 0.33. That's why the 4.01% from House Bill 1776 has now become 4.34. And again, when you generate that math out, you generate 1.18 billion. That's actually just over 10 million more than we actually would need. And so it was our goal all along, and we stated in every hearing we had, in every discussion we've ever had, we want this bill to be revenue neutral. We don't want to generate more money than is necessary to fill the hole. And so if you hear the concept or the phrase, the numbers don't add up, please point them to me, run your numbers, and you'll see that the gap that was identified has been filled by the numbers that we have now plugged in. A couple other concerns we hear about is, some people say, hey, this bill does nothing to address the cost drivers. There are other things out there that are driving school property tax higher, such as the pension issue and so forth. While this bill does not include specific language to address specific cost drivers, such as the pension issue or other issues that we know are causing problems for our school districts, what it does do, and this is, I'm not making this up, this has been verified by the Independent Fiscal Office. On page 4 of their analysis, toward the bottom of that page, they talk about, after year 5 of enactment, House Bill 1776, now House Bill 76, will save $1.15 billion annually in the replacement revenue compared to the growth of property taxes if that system remained in place. So if you're looking to make sure that our school districts have rein in their spending, and I know a lot of people have expressed a concern there that if we leave things in place, they're just going to continue to generate higher costs. Over time, this is going to generate a significant savings to the taxpayer, and it will require the school districts to live more on a budget than they have. And that has been a great concern for a lot of individuals, House members and Senate members that I've talked to about this legislation. Another thing that we hear about is deductibility. People have said, hey, if we put this in place and we eliminate our school property taxes, I'm going to lose a significant deduction on my federal property taxes or on my federal income taxes because of that. And I can't speak to everybody's individual status, but I do know that if you're paying, if you make $100,000 in income and you've got $10,000 in school property taxes, you're not getting a dollar for dollar exchange, if you will, on that $10,000 deduction that you'll receive. You receive the benefit that you don't have to pay on $10,000 extra in your income. And as I talk to homeowners, lawyers, doctors, accountants, it doesn't matter who I talk to, when they sit down and do the numbers, they understand that whether it's $5,000, $10,000, whatever the property tax deduction would allow, when they have that actual money in their pockets, that means a lot more to them than the percentage of deduction that they're going to get off their federal property taxes. So I think that's somewhat of a bogus argument, but yet we continue to hear it on a regular basis. It's kind of an artificial concern. Other things are falling revenues. People will say, hey, sales and income tax, there's a up and down scale of it. As Representative Gillespie pointed to, over time, those have been the most stable, some of the most stable forms of taxation because, as you know, incomes are typically increasing on an annual basis, whether even it's the minimum wage individuals or the professionals, their wages are increasing. So they're paying a percentage on those higher wages. Likewise, the cost of good are increasing. And with the cost of goods increasing, we are seeing higher sales tax generated. So both of those, incidentally, do track the economy in a very strong way. And the distinct difference that we have between sales tax, income tax, and the property tax, if you don't pay sales tax, it's because you're not buying something. If you don't pay income tax, it's because you're not working. If you don't pay your property tax, you run the risk of losing your home. And I know that my time has expired, and I appreciate the committee's indulgence of the extra minute or so that I've been given.
Thank you, Representative Cox. As a former member of this committee, you know we've discussed this issue lots, so we appreciate you taking time to do it again today. Chairwoman Monday, other questions?
Thank you, Mr. Chairman, and thank you, Representative Cox, for your work on this issue. I notice in your bill, in this newest incarnation of the bill, that you have again included a severability clause, meaning that if any part of the bill is held to be unconstitutional, that parts of it could be stricken. So that leads me to the question of what can we expect given a likely resolution to that issue, the constitutionality issue, if the courts were to find that you are not able, by virtue of the uniformity clause, to tax business-to-business transactions, but you can tax individual to individual or individual to business transactions. What would be the net revenue loss as a result of that action by the courts, and how would you propose to make that up?
I have a spreadsheet in front of me that talks about the business services, and just glancing through it, I know that there are different things that are taxed. I'm going to do some rough numbers here in glancing through. We're probably looking at about 500 million. And again, I'm shooting from the hip here. That is it's an interesting question. We don't anticipate that'll be the case. The severability clause was put in there at the Legislative Reference Bureau's suggestion, simply because of the nature of the way courts have begun to look at legislation on a regular basis. They essentially go through everything line by line, and if there's anything at all that puts our legislative authority in question, they have been calling that out, whether it was the way the bill is drafted versus the way the bill was actually passed. They are really holding us under a microscope as to following the legislative process. So that wasn't put in there in anticipation of a constitutional issue, so much as it was a suggestion by the LRB based on the court's recent manner of making decisions.
And yet, Mr. Cox, it seems to me that that provision in your bill is blatantly unconstitutional. How do you tax business-to-business transactions, or not tax business-to-business transactions, and yet you tax individual-to-business transactions?
Well, we are already doing.
And
we
again,
already.
you know,
If I
and
can answer your
again,
question,
if I
Madam
might
Chair.
finish,
Okay.
please. You have addressed a lot of the other questions and concerns that were raised, but it does seem to me that you have not addressed the question that I originally asked, and that is, if that particular provision were to be struck down, you mentioned $500 million shortfall, then how would you make up that revenue loss to school districts?
Well, if we were put in the situation, the legislature, like in any other situation when the court rules on something, we would have to take a look at how we wanted to fill that hole, whether we wanted to authorize something on the local level as recommended by some of these other proposals, whether we wanted to give them additional authority, or whether we wanted to reinstitute a school property tax. That would be the choice of the legislature, obviously. My notion was that we should not put a school property tax back in place. My inclination is that we would likely look to the income tax, as we have done in the drafting changes we made. We would likely, that would be one of the places you look, because it's not a significant increase. $500 million is not a significant increase to the income tax in order to fill that sort of a revenue gap if that were created by a ruling by the court. In regard to the constitutionality that you referenced, business to business, that concept is already in place. We have manufacturing and agricultural exemptions currently in our sales tax law. The design behind the business to business exemptions were not carving it out for any special interest, but they were rather to look at the major elements of businesses. The ones we gave it to were advertising, consulting, research and development, administrative services. These are the areas that are most likely to be included in many business functions. And so in people doing payroll, people hiring part-time secretaries, et cetera, we did not want to force them to include that cost into the cost of their ultimate good and service that they were offering the public. Those same types of exemptions exist, as I mentioned, in manufacturing. We don't charge the stationery maker we don't have them charge sales tax when the raw paper, if you will, is sold to the printing company before they put the stationery heading on there. That then is ultimately charged, any sales tax would be charged at the end as opposed to every point in the process. That avoiding the pyramiding of cost is something that's been upheld constitutionally in those other types of exemptions, and I think the court will see that we've done something similar here.
So in summary, basically, you're saying you do not expect that particular provision or any other, I assume, would be found unconstitutional, but if it were, you would advocate an increase in the personal income tax.
I can't say what I would do. It's going to depend on where we're at. But the income tax is, again, it's one of the easier places to look to generate revenue because a very small change in the income tax generates a significant level of revenue for the Commonwealth.
Thank you.
Thank you, Madam Chairman. Representative Gobbler, I know you have a voting meeting to get to. If you'd...
Thank you, Mr. Chairman, and thank you, Representative Cox. Appreciate the information. I have two questions about the bill. First, I wanted to return to the one thing that you briefly addressed at the end of your testimony, because I think it does significantly factor in, and that is the question of the tax deductibility. You had mentioned about that you thought that it's somewhat of a trivial calculation, but I do recall that the IFO report that or the study that was done on the bill last session, I believe it said somewhere in the neighborhood of $500 million or $500 million would be transferred from state residents to the federal government with nothing in return because of the lack of the availability of a tax deduction for, by shifting from a non-deductible tax or from a deductible tax to a non-deductible tax as in the bill. The other thing is even if you take, for example, somebody that has say they're a middle-class person, they have a $5,000 property tax bill, and they're in the 25% federal tax bracket. That right there is $1,250 that is just kind of disappears into thin air. And then on top of that, you have the increased income taxes, the increased taxes on services, food, clothing, et cetera, that they're going to be paying. So I guess looking at the two together, I wouldn't say that it's a bogus argument, because I think what we actually have is some very substantial numbers we're dealing with. On the personal level, we're dealing with a tax deduction. While yes, it's not a full tax credit, it's still at the federal level you're dealing with tax rates that are in the neighborhood of 25 and 35%. But then if you look at it in the aggregate, it's also a matter of roughly $500 million taken out of the state's economy. And I think that is something that would have reverberating effects across. So I'd like to address that. And then I have one more question, but maybe we'll do them one-on-one if that's okay, Mr. Chairman.
In regard to the federal deduction, the IFO analysis actually, on page 21 of their analysis, actually states that there will be an increase in the federal income tax because of the lower itemized deductions, increase in state income tax and sales tax, but they say that it is more than offset. And this is again, that's an independent fiscal office's understanding of this and their analysis, stating that all of those increases are more than offset by the reduction in school property taxes. And again, I know on an individual basis, you're going to be able to identify, as I have, there are individuals who can look and say, they've got a very high income, fairly low income taxes, or fairly low property taxes because they've had a house for years and years. Individual circumstances are always the most difficult situations to take a look at. But as Representative Gillespie pointed out, we've got to do something for the majority of taxpayers in this Commonwealth who are sitting there under the burden of school property taxes, and they're essentially driving people out of their homes. Committee members that I've talked to time and time again have stated that this is a very burdensome tax, and it is the only tax that can force you out of your home. And I'm looking to change that. The changes in the income tax and things like that, that's not going to force them out of their home. The extra, if they end up paying an extra $500 or $1,000 in income tax, and I'm not saying no one will, that's not going to force them out of their home. School property taxes and the inability to pay those are forcing over 10,000 people out of their homes on an annual basis.
With regard to the IFO comment, and I guess I'll have to look at the context of that, but I guess the thing that I'm struggling with is if no one pays more, then the thing doesn't balance. I mean, if you can't just say that we're going to get more money over here to pay for it, but every taxpayer is going to pay less. So there's obviously
I've never said that every taxpayer pays
not
less. I just mentioned that there will be people who will end up paying more, and that's the nature of legislation. There will be winners and there will be losers. Our goal is to create more winners than losers. And,
Fair enough.
And it's been said that this is, we're simply taking money out of, instead of a person's left pocket, we're taking out of their right pocket. The difference is we're giving them a lot of choice in how it comes out of that right pocket and how frequently it comes out and when it comes out. They might make a purchase once every 3 years that's significant, as opposed to being forced to pay their school property taxes on an annual basis. Many times for a home that they've paid off 10, 15, 20 years ago, now they're paying a mortgage to the school district in essence.
Well, I think it's important that we don't overstate the winners and kind of hand wave the losers. I think that there's substantial calculations there. I think it's important that something that impacts the state's economy to the tune of $500 million, I wouldn't simply dismiss as bogus. The other thing is I wanted to move on to something else. On page 9 of the bill, starting on line 10, I do have a concern. If I read this correctly, does this mean that every single school district is going to have the authority to review every citizen's individual tax return and have access to that information anytime they wish?
What you're looking at there is simply a transplant of the existing personal income tax law. I haven't placed a full analysis on this because this is not new new law. There's no new changes made here. This is taking Article 3, I believe it is, out of the current tax reform code, and we plugged it in here out of necessity to create the structure for a personal income tax to be able to be administered. So this mirrors existing law in its entirety.
All right, appreciate the
If I could, I'd like to go back to your other question. You mentioned the loss of the...
Representative Cox, if we could, I'd like to get on some other members because
Certainly.
Your time's running out, and I want to make sure these gentlemen have an opportunity to ask questions as well. So if we could ask precise questions and give them precise answers, that would be helpful. Representative Bloom, Representative Gobler, I know you need to go to the other meeting.
I do apologize. I have another committee that's struggling to make a quorum, so I'll jump out. I'll hopefully make it back. Thank you.
Representative Bloom.
Thank you, Mr. Chairman. And thank you, Representative Cox, for all the work you've done on the front lines of this issue of comprehensive property tax reform. It's a huge issue in my district for my constituents. It comes up at every town hall. Obviously, it's a very important issue across the Commonwealth, as evidenced by all the folks who took time to be here today on both sides of the issue, and appreciate everyone who did come to attend this hearing. The question that comes up most frequently from my constituents, they know I support the bill, but they're frustrated at the lack of progress moving forward, and they ask me, what can we do to persuade our friends and neighbors and folks across the Commonwealth? And then a similar question I get most frequently from my colleagues here in the House is, I like the bill, but it does not include any substantive tackling of the funding formula, and therefore, why should I sponsor it when I don't know how we're going to address the funding formula? Those are the two questions I hear most frequently, and I'm just wondering your perspective on that.
Well, the way to advance it is to obviously do what we're doing today, get the bill out there, continue the vetting process that's occurred, also providing the information that's contained in the IFO study and the Appropriations Committee. They provided a thorough analysis of it as well. Getting that information out there, discussing it, and I'll answer any questions. I'm working with other members to give them the details on things, so when specific questions come up, quite often I'll help them work up an answer and help them understand it so they can better explain it to their constituents. The progress we're seeing, I mentioned, is in the Senate significantly. We're about at the same level we were at last session on sponsorship in the House. The Senate, on the other hand, had, I think, 12 or 13 last session. They're at 20 this session. So there's significantly more interest in the Senate. And if the impetus has to come from the Senate to get the attention of the House, that's fine with me. I'm going to continue to do my part in the House, though, to get the bill to move. And as I've always said, I'm always open to discussions and concerns that have been raised. I've tried to address as much as possible, and as concerns continue to be raised, I'll continue to work to address those. Your second question, could you repeat that real quick?
Colleagues in the House frequently say they're supportive of the concept of the underlying bill, but they're concerned that this particular bill does not include the funding formula and how to address the funding formula, and therefore they're reluctant to get on board as a co-sponsor. Well,
the funding formula, as Representative Gillespie talked about as well, it's not something that you enter into lightly. As I talked to individuals as I was crafting this bill, some of the original legislation back in 2003 did contain very comprehensive funding formula analysis, and that was one of the things that people didn't like, is how that funding formula played out in their individual districts. When you ran the numbers and saw how things came out under that formula, there were clear winners and losers, and there were more losers in many people's minds under that type of a funding formula. So what I did was said, whatever amount is being raised on the local level by school property taxes, we said that will be replaced by that same dollar amount. That will also be allowed to grow with a cost of living adjustment if the economy allows it. And so for the first time in many years, the school district spending will be retained significantly in some areas by the cost of living adjustment. And so while we're not directly tackling a funding formula, we are reining it in to more match the economy than what we've seen on the school district spending level. Spending levels have been from 8 to 10% increases per year on the school district level. It's not, the economy, as you know, has not grown at that same pace. And so the outpacing of the school district spending will be brought under some control by this type of a structure. Thank you.
Thank you, Representative Cox. Thank you, Mr. Chairman.
No problem. Representative Vankovich and Representative Marabito.
Thank you, Mr. Chairman. Thank you, Representative Cox. We've had areas of agreement and disagreement on this issue in the past. I certainly support changing the way that we fund our school districts, just like everyone else. I have a couple questions. As you know, that in the past, I've expressed to you my concern of putting an extra, I guess, $12 billion in the hands of Harrisburg, and then school districts having to come back to Harrisburg to kind of fight for their fair share or their share of funding. I represent school districts that have large amounts of their budget coming from the state and almost no money coming from the state. So I guess how would you address that question of how is the increased PIT and sales tax getting driven back out to the school districts, and how can we ensure that those areas outside of Philadelphia and Pittsburgh are going to be able to get funding for their schools?
Well, as I mentioned in response to Representative Bloom's question, the funding formula that we put in, the distribution mechanism, if you will, is very simple. If your school district, you've got some that are raising a small amount on school property taxes and some that are raising a significant amount. If you've got a school district raising $10 million in school property taxes, there will be $10 million driven out through this legislation, and that is the way it's crafted. The funding formula begins on page 135 and the following few pages. Additionally, if your school district is raising $100 million and that's what they feel they need to fund their schools on the local level, this doesn't ask questions about whether they're using it wisely or not. It says you're going to get $100 million. And that's what this legislation is crafted to do. It is a replacement mechanism. It is not designed to fully replace what they could raise in the future, but it's designed to make the swap now so that the tax is more fair to the taxpayers of Pennsylvania.
So how do you answer the inequity then for a school district that right now gets, to use your numbers, $100 million from the local property tax earners, local property taxpayers, And then whenever you turn the formula over to how you want it to be with a sales and income tax, let's say that they're only contributing $10 million in revenue to the state. How do you justify the inequity that that creates for some areas that are going to be paying a whole lot more and getting a whole lot less, or for that matter, the other way around?
I don't know that I fully understand your question.
Well, to use your example, you talked about a scenario where one school district might receive $10 million in property taxes, and another that might receive $100 million in property taxes. That doesn't equate, as we know, to earned income or purchasing. So in the school district where they're now paying $100 million in property taxes, when you turn it over to an earned income tax and a sales tax, what happens if their contribution to the state in terms of education funding drops substantially? Let's say that it drops to $40 million. So now the taxpayers in that school district are getting a $60 million tax break, but somewhere in the state, they're getting a major tax increase. And I think that that's part of and I think that's what Representative Gobbler was alluding to, is how do you address the inequity of what a particular area is paying versus what they're receiving? And then how does that translate into decisions at a local level? Because we have school boards that are duly elected, they're making they would then be making the cost side of the decision, but not have to be accountable for the revenue side of the equation. So the people that are electing them won't be paying the bill.
Well, I disagree. The people who are electing them will be paying the bill, as you mentioned, through income tax, sales tax. The loss of the property tax as something that the individuals are going to have to pay, the taxpayers will see a benefit. So the homeowners who are in the $100 million school district, they're going to see a benefit in not having to pay those school property taxes. Again, as I mentioned with Representative Gobbler, it may be a situation where they pay an extra $1,000 because they have a higher income and a lower property tax bill. I can't guarantee in any legislation, any more than any of us have been able to do in anything we've passed, there are always going to be winners and losers. In response to your question about inequities, my school district and many school districts on the eastern side of the state have been suffering an inequity since 1991 when the funding formula was put in place. The hold harmless provisions have left those numbers in place, and school districts out west with falling populations are now receiving the same amount of money that they were receiving in 1991, even though in some cases their school populations have been cut in half. So in response to the question about inequity, there will certainly be some inequities, but what this tries to do is to, while not directly attacking the funding formula that hold harmless creates in that problem scenario, this tackles it by saying whatever you're getting locally, you're going to get back. And so it's not a new burden on the school property, or it's not a new burden on the taxpayers. It's a different burden. They may have to pay a little more in income tax. There may be some losers there in some of your districts, but you're going to have certainly quite a few winners as well. And I'd recommend you sit down and talk to some of those winners to see exactly how much it means to them to keep their home.
Well, I appreciate the recommendation. If I can ask another question real quick.
I'd actually like to go on next members. and if
Mr.
we
Chairman, can I have
time-
your leeway just for one quick question?
One
Quick question.
with one very quick answer.
As we all know, we have a major property tax burden coming down the pike with the pension spike. The employer contribution will top out at 32%. How does House Bill 76 address that particular issue, given that property taxes are going to go through the roof and there's nothing we can do about that? One of my concerns is how does House Bill 76 address that?
We can't, I don't think any legislation outside a pension reform bill can tackle that. And there are several proposals out there. I know Representative Grell is working on one, and there are several others that have been floated. For me to include that type of proposal in here would have taken the bill up a significant number of pages and it greatly increased its complexity. My goal in introducing the legislation, if you could let me finish, please. My goal in introducing the legislation was to simplify it as great as possible. As I mentioned, we pulled out numerous aspects that were very complicated to explain to people, and we tried to simplify a simple funding formula, a simple increase in taxes, and how that was going to be, how that would play out.
And I just, as food for thought, I'm not asking for pension reform to be included in 76. We can't stop that amount that needs to be paid over the next few years. No pension reform will change that. My question is, how will House Bill 76, if it shifts to a sales tax and income tax, I'd like to have that continuing conversation with you.
Absolutely.
Thank you for your
both
indulgence.
gentlemen. Representative Marabito, Representative Lawrence. Again, we'd ask for some precision because we are now impeding on Representative Grove's time.
I've been supportive of House Bill 1776 and this bill, House Bill 76. There's a question on inequity that I'd like to raise from a different angle, and also dealing with the practical aspect of trying to get the bill passed. When I look at the groups that oppose the bill, NFIB, the Newspaper Association, the PA Bar Association, the retailers, I'm wondering if part of their opposition is what they perceive as the inequity in what's happened in the business community in taxation. I'll give you an example. The natural gas industry in this state, as you know, pays no property taxes because of a quirk in the Supreme Court decision in legislation that we passed. So they don't pay property taxes when they put a well in the ground. And yet someone who builds a strip mall and raises the assessed value of raw land pays much higher property taxes. Natural gas industry pays no severance tax, even though they do in 38 other states. And finally, because they're classified as a manufacturer, they pay no sales tax. So when a small business person out there goes to renovate a building and sinks $500,000 of his own money into it, he'll pay $30,000 in sales tax. Someone can go and put $2 million into a well and they won't pay a penny of sales tax. And what I'm wondering is whether we need to approach the equity question, because we need to get some of these organizations on board. And I know this is like throwing a little bit of a wrench into it, but maybe we need to look at whether they should be exempt from paying sales tax on manufacturing equipment, whether the natural gas industry, which we've been told is going to be around with us for 30 or 50 years, should be paying its fair share. The ironic part of them not paying these taxes is that they're coming into our communities, which is great. We see population growth in some of the rural communities. That, of course, means that some of our school districts are having to educate more children, which we do gladly. We welcome them. We want them. But it seems a little inequitable to the rest of the folks in the state who have been here for their entire life that they're not. And I'm wondering, how do you think we can approach that equity side of it?
As far as that, if there are proposals out there to change the funding sources of this, if somebody wants to put an amendment together, it can certainly be entertained by the committee and by the House if it makes it to that point. I think revenue sources are always on the radar as far as what we can do to more fairly make sure that businesses and individuals are paying their fair share, so to speak. My legislation it's not a brand new concept, but it is something that we've tried to make it as fair as possible and to enable taxpayers to have a little more choice over when they pay their taxes and how much they pay.
Well, I commend you and also the people behind you who have come here from other parts of the state for coming out, and we will find equitable ways, I think, to make the tax burden less of a burden on property owners, and also in a way that maybe gets some of these business organizations on board.
And I can't speak to what each of their individual objections.
Representative Cox, he was kind of entering his question. I'd kind of like to go on to the next
Well,
two.
he had phrased it as a question in the first part of his statement, so I thought he wanted an answer to it.
Well, we're 15 minutes into the next testifier's time, and all due respect, I'm trying to give as much latitude as I can, but I have two other people who have been patiently waiting to ask questions. You guys all right with that?
Yeah.
Thank you. Representative Lawrence, then Representative James.
Thank you, Mr. Thank you, Mr. Thank you, Mr. Chairman. Representative Cox, I appreciate very much your testimony. I'm a supporter of your proposal. I don't think it's a perfect plan, but I think it moves the conversation forward, and I think that's very important. One question I have for you, and I want to be very careful not to pick out any, I'm not trying to pick out individuals or regions or anything else, but I think it'd be fair to say that there's not been a great deal of support for this proposal from the greater, specifically from the Philadelphia area in the past. And my question is that with what we see happening right now in the city with the AVI and the changing of how property taxes are assessed and just the dramatic change we see in the city, do you think that might kind of bring some additional support to this proposal? I mean, obviously, anytime you're looking to move legislation in the House, you've got to get to 102, right? So as we look at kind of the kind of the team of people we put together to get to that number, do you think that the changes in Philadelphia right now will bring people on board, or perhaps not?
Well, I can say that I absolutely believe it'll bring people on board. We now have two members from the House who are on board as co-sponsors. And that has been almost a direct result of the AVI situation that's occurring. The discussion in Philadelphia, as you mentioned, it is showing an increase in the discussion about how we're funding our schools, how they're funding their schools, what the changes of the AVI are going to bring to their taxpayers. And so they're going to begin seeing the crunch in a much more significant way, and because of that, the discussions have already begun with the Philadelphia delegation, and I expect they will continue.
All right. Thank you. Thank you, Mr. Chairman.
Thank you both. Representative, I can't find my own list. Representative James.
Thank you, Mr. Chairman. Representative Cox. Two questions of clarification, please. First of all, why is it better to do this all at once as opposed to phasing it in over a period of 3, 5, 7, 10 years, whatever the magic might be there? Number two, all the attention is being paid on personal income tax or earned income tax. Was there any thought given to whether or not it would be appropriate to tax IRAs, pensions, Social Security, dividends, interest, all their forms?
Well, some thought was given to, and I'll answer them in reverse order, if you will. Some thought was given to what we tax. A lot of other states do tax pensions, IRAs, and other retirement vehicles. And when you look at that, part of my thinking in putting together this proposal was there are several inequities in income tax. There are several inequities in property tax. Property taxes, you're paying on something over and over and over again. I don't like the idea of a personal property tax for that same reason. You purchase a vehicle, having a personal property tax on the vehicle, like some states do. We examined that. It kind of goes in the face of true ownership. And so depending on the retirement vehicle, depending on the pension, et cetera, if they've never paid tax on it in the first place as a retirement vehicle, that may be something we could look at. But if they've already paid tax on it and they've just got retirement savings or another type of vehicle that they've already paid tax on, and we're looking at taxing them another time, to me there's an additional inequity tossed in there. So I'm not opposed to taking a look at what exactly we tax, expanding income, but as you can imagine, changing the scope of what we tax as far as income would bring me a whole new set of enemies. And I know we're going head-to-head with a lot of special interests. Representative Mirabito pointed out a few of them. We are going head-to-head with some special interests. They don't like it simply because they are now going to have to collect sales tax. And that's a fact. They've been enjoying the benefits of not paying sales tax or not collecting sales tax for years, and they don't like the change. So that's where a lot of that opposition comes from. I think that's the overall answer there. Did I answer all your question, or did I miss something?
Then the phase-in feature versus
the phase-in part of things. Each of the previous proposals included a phase-in, and some of the concern there was as you phase it in over time, there ends up being a need of some sort for a buffer fund, and so there was a concern raised by a number of members of the House that said, as you hold that money in a savings account, if you will, or a reserve fund, that's money that is actually the taxpayer money, and so they didn't like that we were holding on to taxpayer funds and not distributing them directly. So the design of this was, and with the help of Mr. Baldinger and the 78 taxpayer groups that support this, we ended up taking and just streamlining and saying dollar in, dollar out, and we felt that was a cleaner and even more equitable way to do things, to avoid that buffer fund that would keep taxpayer dollars in government control any longer than absolutely necessary. Thank you.
Thank you, Mr. Chairman.
Representative Greiner, I'm sorry, I thought you were pointing to me. Anyone else? Representative Kortz for a quick question.
Real quick, thank you, Mr. Chairman. Thank you, Mr. Cox, for bringing this to us. And as you know, I'm a supporter of it. Are you planning to take 76 to the IFO for another analysis?
I have heard kind of through the grapevine that there's been some talk of individuals already doing that. I'm going to put the request in if somebody hasn't already done that, because I would like to verify that the changes we've made, that it would in fact solve the problems that they pointed out. And the main problem was the revenue issue. I feel our changes have addressed it. If they could just rubber stamp it and say, yes, these meet our approval as far as making it revenue neutral, I'd certainly love to have that from them as well. Thank you.
Thank you. Representative Cox, thank you for your time, and to the members for all the questions. We will now move on to our last testifier, Representative Seth Grove. Seth, for camera's sake, I don't know if you want to go to the head of the table there. We are not using the aerial cameras.